In case you missed it this week, TD Bank is now the most shorted bank in the world. And because I'm a shareholder, I wanted to go through and figure out if I should continue to hold or if I should be selling this company right now. So today in this video, we are going to be going through the 3 reasons why this company is being attacked by the short sellers, and we're going to give some reasons on the counter argument as to why this should be nothing to worry about. So stay tuned till the end. I'll be giving my thoughts as to what I'm going to be doing with my shares of TD. But if this is your first time here, my name's Nick and welcome to Ways to Wealth. Now, it should come to no surprise that when we look at TD's performance over the past year, it has been lackluster at best, down just over 17%. And this is something that is widespread across the financial and banking companies. And this is due to what's happened with the regional bank SVB down in the States and Credit Suisse in Switzerland. But the surprising point is that they're attacking a Canadian company, which is an industry in Canada that is very well renowned, something that has been able to withstand the 08-09 financial crisis. So let's pull back the layers of the onion to figure out why this is happening now. Now we'll jump over to this Bloomberg article here to figure out the 3 reasons why people are so bearish against TD Bank. And the first one that we can see here is that US regional banks and the failures that have happened have definitely scared investors, especially since they have proposed a buyout of a regional bank by the name of First Horizon, totaling $13.4 billion. Investors, shareholders, they are not happy about this deal. They want to walk away and break free and be able to get cheaper deals now that the market has sold off. How much of a bad deal is it? Well, First Horizon shares are trading about 30% lower than TD's original offer of $25 a share. So it's almost like they're taking a 30% bath right off the top. The next reason should be no surprise to Canadians. Obviously, here in TD, they do hand out a lot of mortgages. And to this point, there are very few signs that Canadian lenders have had any of the liquidity issues that we've seen in the US. With that being said, analysts are also pointing to worries of TD's exposure in the country's housing slowdown. Well, how big is that slowdown? Let's take a look at this article here, and we can see that according to the Canadian government, the total number of insolvencies rose by 13.5% in January. And obviously, if fewer people are repaying their debts, that could pose a problem to TD. We all know that interest rates have rose on a dramatic path in the past year. Couple that with the fact that Canadian housing prices are so high, this is definitely a risk that we should be definitely taking into consideration, especially if people start defaulting more and more on their loans. And the third reason is TD's stake in US bank Charles Schwab. We can read here that it has a 10% stake in the bank. Charles Schwab has also had some big write-downs in regards to bonds. This article here shows 28% as of December, but I believe currently it is at 47 billion in bond write-down. So that is a very significant number. Charles Schwab shares have also sold off recently. So those are the 3 main considerations right now that so many people have piled in on bets against TD Bank. Now that we built a bear case against TD Bank, let's play devil's advocate and try and build a bull case, especially if I want to hold on to my shares. And we'll start off by an article that I found on Twitter by Bill H asking, are Canadian banks safe? And what he's trying to do in this article is figure out what's going on with the deposits. Are people still depositing money into their bank accounts? Because what he states, what happened in the US regional banks is that their deposits were actually decreasing by 10 to 20%. So when he did the research on the top 6 banks in Canada, we can see in the deposit growth category is that they're actually growing. So we're not going to have a similar type of situation where people are doing bank runs, pulling out their money. We're actually seeing people continue to put money into the banks. So for now, we can say it's safe, but definitely something to keep an eye on for the future. When we talk about the housing market here in Canada, it is a concern for many Canadians. We talked a little bit before about the average home price. We talk now about 4-5% on a mortgage rate for a 5-year fixed. Are these numbers sustainable? Are we going to be continuing to pay off this debt to the banks? Are we going to continue to pay these mortgages? And that brought me to a CMHC article back from 2020, which kind of changed their course in terms of how much they would accept. And when we learn a little bit more, initially they were willing to take up to $50 billion worth of loans off of the bank's books. They actually extended that. They moved it to $150 billion. This action will expand the stable funding to banks and mortgage lenders in order to ensure continued lending to Canadian consumers and businesses. What this sounds like to me is a backstop. Will the CMHC continue to step in, especially if those insolvencies continue to rise? Potentially, yes. This could be a bull case, knowing that the bank is protected if people continue to default at a higher pace on their mortgages. In regards to the $47 billion that Charles Schwab had wrote down in bonds, we also have to take a look at what TD is doing in their own accounts. And we can see in their latest report that they had $241 million in unrealized losses themselves. So this is something that could be plaguing them individually. But when we look at the overall picture, this is something that many banks are considering. TD does make a lot of money. This is just a splash in the big pool of money that they have. Although it does seem like a pretty big write-down, this is very minimal in regards to the overall balance sheet. And in doing further research about TD Bank and its current short positions, I came across something super interesting. This chart here shows the historical trends of short positions within the company, and we can see towards the end that $3.7 billion worth of shorts against it, but it actually isn't where it's been in terms of the past. In June, July, and earlier this past year, we see that there was $4.5 billion worth of shorts against TD Bank, and it didn't really have too many implications. So it seems that ever so often we get people that want to tear down the Canadian banks and put shorts against it, but have failed so many times. And it seems like the Canadian financial institutions have to live up to so many regulations that they're almost protected. And we know in Canada, we run an oligopoly. There's only so many companies that can actually compete. So these are some of the reasons why I'm bullish. We're looking at deposits. Deposits are growing, although minimal. We have a backstop for the mortgages. Obviously, insolvencies will continue to rise, but will they be so impactful on the business? We also have here is that the short interest isn't as great as what it's been in the past. And although it is leading the #1 bank that is shorted, it's something that could be an anomaly. It could be, a trend that continues in terms of people putting bets against it. But in terms of my own current position, what I'm going to do with this information is it's given me opportunities or given me areas within the company that I should watch. Deposits, what's going on with insolvencies, and what the short interest is doing. So with that being said, I'm going to continue to hold for now. That is my current position. And I'm going to watch these things as they evolve, as they continue to grow. But that is it for me. Let me know down below what you're doing with your TD shares today. And if you like this content, make sure to check out some previous videos I've done about the top Canadian bank ETFs. And then we also cover a lot of different high interest savings account, which I'll link there. I hope you all have a great week in the markets. Happy trading.